Great to be here. Great to be here. And today we're going to talk about gaps. We're going to talk about the stock market. For those of you that don't know, I trade the U.S. stock market. So I look at stocks, mainly companies. Okay, most of them are well-known companies. Today's play was Walmart. And sometimes it's things you don't know of, but they trade on the market with volume. So you can trade the U.S. market from being anywhere in the world. You can be in Canada, you could be in Saudi Arabia. The U.S. market, though, is only open from 9:30 to 4 o'clock Eastern time, so you have to be available to trade my method in the morning between mostly 9:30 and 10 a.m. So this worked out perfectly today. For Walmart trade is still going, though, but I usually focus on morning trading, okay? So I own my own company. It's called the Stock Swoosh, and we're going to talk today about institutional money and gaps, and I'll explain what I mean about that more in a little bit. You can go to my website if you'd like more information, www.thestockswoosh.com, and I also appear on Fox News and Fox Business Network, and you can watch me tonight. I'm going to be on Charles Payne's show at 6 o'clock. Maybe we'll even talk about Walmart. So we'll see. Foxa is actually reporting tonight, I saw, so Fox, 21st Century Fox reports after the bell tonight. So we might talk about that and markets too. Market kind of neutral today in the SPY, and the QQQ is not really much read on the market right now today. If we have time, we can take a look at that when we're done. So today, I hope that you will learn something. Whether you learn something motivational today or whether you learn something specific today about gaps, which I'm going to talk about in a minute for those of you who don't know what a gap is. Hopefully today you will learn something. And again, these are great webinars. These are great seminars to come when they have the whole shebang. They have 5, 6, 7 people, because you can go and kind of block out your day and really just take in all the information you can from lots of different sources, which is the point of coming to an event like this. So you try to pull something from every speaker when you're at an event like this. So hopefully you will learn something here today from me. And what is the main thing I'm going to talk about? I'm going to talk about trading with power money, or what I call institutional money. So power is what? It's big money that comes into the market. So it can buy stocks, it can sell their positions in stocks, power money. It's big money, millions and millions and hundreds of thousands of shares, okay? The idea of trading with power is that you're trading with the momentum. You don't need to wait for a pullback. Many times you will miss the move. So you've got to learn how to read this power, how to read this power money, how to read the buying momentum and the selling momentum so that you can make money in the market. And actually, it's a heck of a lot easier to trade with momentum than wait for the pullbacks, because you can never quite be so sure exactly what pullback is going to hold, for example. And actually, the market's a great example of that, because right now, and I'm just going to talk about the S&P and the Spiders ETF, and the SPY, it's pulled back to the 200-pair moving average several times and held. Will that be it? Will it hold forever? Will the market make new highs on that hold, or will it break? You don't know, okay? So what I do is I'm looking for trading with power, or basically trading with momentum, okay? Here's a great example. This is a chart of Apple. Now, Apple had earnings out last week. Actually, I think it was a week ago. It was a week ago, because it was the night I was on Charles last week. The earnings weren't that crazy great. They were okay. I expected a bigger move on Apple on the earnings. I would have liked to see Apple on the earnings do what it really did then on Friday. But for those of you that don't know what a gap is, I'm going to go over this. Here's a daily chart. It's a daily chart of Apple. Okay. Again, this is the U.S. market. Close at 4 o'clock Eastern time. Here's the close of Apple. This was Wednesday night before the earnings. It was around 169-ish. Boom. Gapped up in the morning, opened on Thursday here around 175. Now, I would have liked to have seen Apple open here in the earnings the day after the earnings. It did not, but it did do it then on Friday. So anyways, this is an example here, though, of momentum from here to here and from here to here. Apple had a monster move on Friday. Actually, Apple lifted the entire U.S. market on Friday, which is hard to believe. It was even hard for me to believe, but it did. And that just goes to show you what power can do. And again, it's money, it's buying. So this is a good example of institutional money in a chart. What is it doing? Apple's getting bought. Okay, so Apple is not a short, Apple is a long. Now, I wouldn't go long here Apple today, just FYI. The move on Apple was either here or here. So this was a gap up, this was a gap up. This was Friday morning. Stock closed here, 177 gapped up. It was on some kind of news of Berkshire Hathaway. I bought a big position in Apple earlier in the year. And that's another point that I want to make here, all right, that institutional money is what? Big funds. And they will buy stocks. And as a result, they will lift stocks. Now, I forget when they said it was, January, February, I don't know, it was first quarter of 2018 it came out that Berkshire Hathaway had bought more of Apple. Obviously, it got bought up here in the earnings as well from the news and the announcement. But the point is, though, that if you go back and look, let's go back here, this is January. Okay, so this is January, drop down in here. This was February when the whole market kind of fell in here at the beginning of February 2018. Apple actually made new highs in March of this year, and the Qs did as well after that sell-off that happened at the beginning of February. So you could really, now that we know what Berkshire Hathaway did, you can really see how institutional money had been buying in here. Otherwise, Apple wouldn't have made a new high. So Apple is one of the strongest charts right now in the market. So this was when everything else, including the SPY banks, a lot of stocks, were not at new highs. Now the QQQs made a new high at this point here in March as well. The Apple's about 10% of the QQQs, which is another market ETF that I look at besides the SPY, okay? But institutional money is something that you want to play with because it moves stocks. So if you would be long Apple, or if you would have been long in here, you would have made money. And you would play it on the gaps. You would not play it on pullbacks. Here was another gap over here. You could have bought this gap up in Apple back here in February. It took the stock out to new highs, okay? You see here that if you bought this pullback here, it rallied but broke this support, broke the 200-period moving average. So if you're waiting for pullbacks, you will not have precise entries. It's more precise. There's more precision in playing the gap. You make more money, you get bigger moves, you're playing with the momentum, and you're looking for the institutional move. So again, this is the philosophy, this is the theory, this is what I do. Now, that being said, I want to briefly point out, because somebody in the trading room had mentioned this morning, you must know that not every gap can be played in the direction of the gap or vice versa. Some people believe in gap fills. That does not work. But you can't buy every gap up. You can't go long every gap up, and you can't short every gap down. That doesn't work either. So I developed a method and a system to rate the gap in the morning in the pre-market, which is what we did this morning in Walmart, and we're going to go over this a little bit here. Walmart was a short. To rate the gap in the morning in the pre-market, that's what I look at. That's how I'm making the calls. That's how I'm looking at it and saying this is going to be a short or this is going to be a long, so that you know to take the position into the open between 9:30 and 10, whether to go long or short. But absolutely, not every gap is a good gap. You can't go long every up gap, and you can't short every down gap, okay? Any questions so far here? Now, if you've been trading and you've not been doing well, or if you've been trading and you've been losing, I think that this time period here, we're getting into the end of the earnings season here now, into the end of May. Market will be closed for Memorial Day holiday. It's a good time to really kind of review where you're at for the year. It's not quite half the year is over, but soon, half of 2018 will be over, which is really, really hard to believe. And if you're not making money in the market, or you're interested in trading and not doing anything, not trading at all, just sitting back and doing absolutely nothing but thinking about it, and you've been thinking about it for months and months or even a year, should you do something about it if you're not trading? Or should you change what you're doing if you are trading and you're not making enough money or you're losing, okay? If you continue doing the same actions, you can only expect the same results. You're not going to have different results if you kept making the same mistakes over and over, or if you keep staying in a stagnant place. And by a stagnant place, I mean a place of indecision, a place of not knowing what to do. Essentially, when you are trying to decide what to do and can't decide for a length of time, I'm not talking about an hour or a day or a week. I'm talking about you can't decide what strategy to trade or whether to trade or not for months and months and months and weeks. Then you basically have made a decision. You've made the decision that you want to stay stuck and you don't want to move forward into your future, that you want to stay stuck in your life. Okay, that's not the way to success. That is not the path to success. If you want different results in your trading and your life, then change is required. And it doesn't have to be hard. Change can be an amazing, wonderful thing, all right? And it's necessary in order to move ahead. If you want to be more successful in the market and in life, then learning a trading system that will bring about the financial results that you'll be looking for is the path that you're going to have to take. And if you're not on that path right now, you need to do something about it. And again, we're getting into the halfway mark of 2018. You've got to change what you're doing if you're not making money. And the sooner the better. And sometimes it is about the type of trading that you're doing. Maybe you're trading forex and forex isn't working for you. Maybe you want to learn equities, okay, which is what I do. Maybe you're doing futures and that isn't working for you. Maybe you want to learn equities. Maybe it's the system, or maybe it's the type of trading that you're doing that doesn't work. And one of the reasons that I like apps is because I can do it in the morning. All these things that I'm doing on television, I'm able, even this webinar here today, if I traded all day long, I couldn't do any of these things. Couldn't have a business, couldn't be on TV, couldn't do all these exciting things in my life. And I'd be stuck inside looking at a computer at 4 o'clock when it's an absolutely gorgeous day outside in Manhattan, which is not ideal. And getting into the summer is a great time because I don't have to stay at a computer all day to make money. I'm looking for the move in the morning, a momentum move that happens right into the morning, and I'm out. So I always say, think about what you're doing. Think about changing what you're doing. Think about changing your system if you're not making money. If you're making money, stick with what you're doing. Stick with it, all right? But if not now, when? And that's something that everybody, I think, needs to take stock in. Now, this is a chart of the SPY. Okay, clip this in here from yesterday, close into yesterday. The market has been really crazy this year. And by crazy, I mean what? Back and forth, back and forth, back and forth. It looks like it's going higher. It looks like it's going lower. Here was the move up in the market. Made new highs almost every day in January 2018. Then the market gapped down. This was late January. Then we gapped down here again. This is February. Gapped down here again in February. Fell hard very, very quickly in the market. Then we looked like we were going to cover. Then we tried to do it again. Couldn't do it. And now we've been stuck in this range pretty much since through March, all right, which is where we're at. But all of this back and forth has created opportunity for traders because there's been a lot of volatility. Opportunity meaning what? It's an opportunity for you to make money and not only that, to get good, to push yourself to get good. So if you've been skating along somehow like in 2017, you could have gone long virtually any strong stock in 2017 and made money. Even if you were an idiot and you didn't even know what you were doing, you could have gone long because the market made so many new highs in 2017. If you were in a strong stock and an uptrend last year, you could have made money trading. Not the case this year. And by the way, I would never suggest that to anyone. The ideal way for you to make money is really to know what to do, even if you're in a market that is uptrending or downtrending in a power trend, which is rare, but we did do it last year. The most money that you could possibly make is with the right skill set. So, because even if last year, if you knew what you're doing, you could have made even more, okay, if you knew how to read charts good, because you would have bought the things that were extra, extra strong on their own. But volatility in the market is here to stay for the rest of 2018 and could take us into next year. We'll see what happens here exactly when we flip around again. Right now, the market is in an uptrend, but it's sketchy. Sketchy meaning every day, if you don't know what to look for, if you're not reading the gaps in the market, you might change your opinion on which direction we're going. One day the market looks higher. Friday, here was the rally that was created with Apple. Market actually gapped down here on Friday, had a big rally. Then we gapped up, followed through. Then we gapped down the next day, didn't follow through. Then we gapped up today, didn't follow through. I mean, we're all over the place. So again, you've got to have conviction in what you're doing. You must have a system to follow if you want to make money in normal environment. But in an environment like 2018, you really, really got to know what to do. And I'm telling you, if you do, then you will make a lot of money. Normal circumstances are that a lot of people in the market that do well take their small percentage of people that do well, and they take a lot of the money out of the market. And there's a lot of people that trade that don't do well that lose, and that's the bigger percentage that lose. So if you want to be in the percentage of people that win, which is a small percentage, there's a lot of money available for you to win. And this year is no different, and I think it's even more extreme this year, meaning that if you knew what to do, you could make more money this year, okay? And Apple was just one example of a chart in there, which was a huge call that I made. Anyways, if you want to be successful, which is the only reason you would ever want to do anything, whether it's trading, whether it's your regular job, if you have a business, anything, you want to be successful in it, you have to have consistency. And again, this is very, very true in trading. You can't change your mind. all the time about what you're doing. You have to stay consistent. Without this, it's hard. It's hard to stay in the market for any length of time because you'll blow up your account all the time if you're doing different things and you're not consistent and focused. You've got to have the right focus. 10 years now, I started out in 2008. The only thing I've ever focused on is gaps, all right? Equities, gaps in stocks. If you've been dreaming of being successful in the market for years, but the success has eluded you, stop and consider why. Why have you, if you're not successful trading, why? Are you not focused? Is your money management horrible? Do you have a good system, but your money management is terrible? Do you not believe that you can do it? Do you not think it's even possible that anybody could do it? And if you think it's possible that anyone can make money trading, why do you think it's not possible for you to do it? Have you not made it a priority in your life? Okay, and by priority, I don't mean 40 hours a week or 60 hours a week. I mean priority where you say, I have decided that I'm going to learn this thing, I'm going to get this thing, and I'm going to give myself a date. I'm going to be successful and start to do this by such and such a date. And not a date that's far off, a date that's within at least 30 days. So many people put off making changes in what they're doing. Either way, I think 2018 is a great year if you're ready trading to elevate yourself to a whole new level or to start out something new because of the opportunity, because of the volatility in the market. And it requires a deeper understanding and a better comprehension of an overall wider perspective of what makes individual success possible for a trader or investor in the market. All right. Now, getting back to what I was saying earlier, institutional money. When you become a specialist in seeing what's getting bought or what's getting sold, that's how you're going to make money because you will make money trading with the moves that institutions are making. Now, how do I do it? It's basically technical analysis. Advanced technical analysis is technical analysis in gaps. I'm reading the price action in charts. I'm reading the price. I don't use any fancy indicators. If you see my charts, they're very, very simple. I have the bare minimal things on. In fact, I could take everything off and just have the candlesticks. But I like candlesticks to read the price action, but that's what's showing me the price. But it's technical analysis of gaps. Too many different indicators take your mind off what you should be looking at, which is the price of where something is trading at. Okay, for example, Walmart right now. But that's how you're reading the footprints of institutional money. Read the price. What is happening, okay? And by institutional money, I mean big traders, big professional traders, hedge funds, banks. Banks take huge positions in stocks, okay? Berkshire Hathaway, we talked about that, was a great example of an institutional buying that came into Apple. Institutional money is hedge funds, banks. These are the ones that move the market, okay? And big traders too. Here's another great example of institutional money. This was another earnings gap, okay? It was a long, I called a call on this for the option letter only because it was very expensive. You could have day traded this as an equity trade though as well if you wanted to. CMG was last week too. Stock closed here around 340, boom, gapped up the next day. Literally, look at this price over here. Again, you're looking at the price around 385. So the stock gapped up 45 points overnight. This is from 4 o'clock into the morning here, 9:30. And then it rallied, I forget how much it was, like 30 some points or something on the day. So this move here from 340 really to the tippy top, I think it was like 425. I mean, I think it was like 75, 80 points or something. Might have even been 85 points. This did this within 24 hours. So from here to the top. This is one day, this is the next day. Look at that. The stock got bought, okay? This stock got bought. This stock is still higher. Again, where would you want to buy? Not the pullback. You would have wanted to buy the day of the gap, okay? You would have wanted to buy this day here. Make sense? It's not always a monster candle, but it can be a monster candle. You want it to be a monster candle. Marcella say monster candle, but the idea is you're not getting in after the monster candle. And I'm going to show you this on Walmart. You're getting in right into this before there's even a candle formed, Marcelo. You would be going long this in here before this thing has even happened. The genius and the beauty of rating gaps in the pre-market, which is what I do, is I'm predicting. I'm making a prediction. I'm making a prediction that this is going to have a monster bar, and the monster bar is going to be up, not down, so that you would buy a call in it, or you would go long the stock. Ideally, you want every day you trade to be a monster bar in the right direction. But the genius of what I do is that I'm predicting before this happens to take the trade. Because if you're getting in here, you know, where are you going with this? And now this is still higher, but obviously you want to get in here. You want to get in it long. And a lot of day traders thought this was going to fill the gap in here and that this was a short. This could have been a big monster down, Marcelo, but it wasn't. It was a long. And that's what I'm saying. You figure it out in the pre-market before anything has even happened on the live day. This is after 4. It's easy now to say, oh, well, that was a long. But the genius of what I do is I'm predicting it in the morning, the pre-market. And I'll show you better with Walmart because I'm going to show Walmart pre-market charts in here a little bit. But let me just go back to this bigger picture here in CMG. One of the reasons this had such a big move in the gap up and held, and one of the reasons why this is still higher, okay, you still got to pick a good entry point in this if you're not already in it. One of the reasons that this is such a good indication here of institutional money and the flow of it coming in is that CMG was in a downtrend for quite a while. In fact, CMG was even in a downtrend in 2017. I called so many puts in this last year, and they literally all worked. I mean, I was calling puts like every week in this. This is now in an uptrend. So institutional money, for whatever reason, has decided to buy the stock, and the stock is higher. The stock was in a downtrend. Now it's in an uptrend. And the first day of the uptrend was, guess what? The day of the gap. The day of the gap, the morning of the gap, whatever day this was, I think the 26th, it went from an immediate downtrend to an immediate uptrend, and that is extremely powerful. And that is the kind of power that institutions have in the market because they have tons and tons and tons of money and billions of dollars, and they can move stocks, and they do. So that's why if you play with them, you can make money too. And you only need such a tiny little piece. You even need like a baby piece of something like that. Even if you got 50% of the move in that day, 25% of the move in that day on CMG, you made money. And again, it has to do with the accuracy, okay? But a lot of traders looked at that as a big gap up that it would potentially fill the gap. And again, some gap ups do fall. Some do, but not ones that rate good per my system. Okay, which is why I'm looking at it and determining the pick. I'm predicting the direction stock will go in the pre-market. It has to do with commitment. So when institutions decide to buy a stock, and CMG is a good example, when they are full on back in something and want to buy it up and move it higher, okay, then there's a commitment level. So the commitment isn't going to be willy-nilly. It's not going to be, well, we're going to buy 2 million shares of this stock, ABC stock today, and sell it tomorrow. No, that does not happen, okay? There is a level of commitment that comes in. And these decisions are made for so many different reasons that have nothing to do with anything that we do, and we'll never know the reasons. We don't have access to that information, and it's not necessary, luckily, for us to trade. I do not look at fundamentals. If you want to, fine, but sometimes they do not match up and they don't add up. So if you trade based on fundamentals, you're not going to have a high rate of success. What's happening in the price of something, which is why I focus on technical analysis in a chart, and specifically in gaps, is very significant. It will tell you the direction that something's going to go. But commitment from these institutions has a plan of action. They have research reports. They make decisions based on partially these research reports. They do them for each other and buy them. And then there's companies that actually put out research reports. They cost hundreds of thousands of dollars, so you'll never have access to that research. One report could be $500,000, and they buy and sell them amongst each other, okay? So we do not have this information, but we can see a gap like in Apple or like in CMG in the morning or at night. Sometimes gaps happen at night in the post-market or the pre-market. Like I said, Fox is out tonight in the post-market after 4. It will report. So we see these things after hours, and you can rate the gap if you knew my system to determine what to do the next trading day to go long it or short it. You want to get in the trade before that big bar happens. If you get in after the big bar, it's too late. You've missed the point of entry. You've missed the chance to make money. You've missed the big move. You've missed the easy get in, get out kind of thing. All right. Because remember, if you're a day trader, and I don't care if you're day trading options or day trading equities, just taking the equity position with margin or buying power, You know, it's so much easier to get in, get out, get in, get out, get in, get out. Okay, that's why I focus on between 9:30 and 10. You're less at risk the less time you're going to trade. And in these types of scenarios, right now we're in a volatile market, you could be up money, okay, and then you could be all of a sudden down money very quickly. You know, Trump can go out and tweet something, somebody could happen, some kind of economic data happens or something, anything. I mean, anything can move the market at these times. So when you're up, you got to make sure you get out with profit. Makes sense? Would this apply to the Dow? Index day trading. You can apply this to anything that trades the gaps. So it has to have a close and an open. So therefore, you can apply my method to trading gaps or rating gaps for anything except for forex, because forex only has one gap a week. So you'd only have to be able to apply it to currency trading once a week. There wouldn't be enough opportunity to use it for that because it only has one close and open a week. But as far as the DIA, yes. As far as the SPY, yes. As far as the QQQs, yes. And in that sense, if you do futures, it would definitely enhance your current futures trading if you would be rating the market gaps, all right? Although I don't trade futures, but you could look at the market. Make sense? Dr. Sean, I don't know what your question is about volume. I don't trade stocks that don't have any volume. I don't trade penny stocks. I don't even look at penny stocks or junk. Junk, junk, junk. You'll never get rich trading that stuff. Junk. But I don't know what your question is about volume. All right, let's talk more about institutional money. If you learn how to read the footprints of big position players before the momentum occurs, that's the idea, before the big bar, okay? You can take the position in the right direction, get out after the move happens for profit. And that's what you want to do. Easy. But you got to pick the right stock. You have to understand, though, how to trade with decided power, and you need to know how to find it. It's very important to find the power. It has the ability to pay you, and in a big, big way, and so does the market. But you got to get the picks right, and that's where the focus comes from. That's where the skill set is. It's a skill. It's a skill that I can see that Walmart today was a short. Today was a great example of my skill set to see that Walmart was a short. It was not an earnings gap. It was down a lot. It was a news gap. It had a big rally in the morning, and we are going to look at that chart. But Walmart was a short. Knowing how to read what institutional money looks like is essential to becoming successful, and you can win really big on this because the amount of money that you make only has to do with the size that you take. So, for example, if you take 1,000 shares of something and it drops $1, how much would you make? $1,000 bucks. If you take 2,000 shares of something and it drops $2 and you're short it, how much would you make? $2,000. So whether you go long or short, it has to do with the size. But you got to get the pick right, and you got to get the direction right. And a lot of people lose money in the market because what? They just don't get their direction right. They simply do not get the direction right in their trade. So simple, but it is most of the reason why people lose. A couple questions here. Let me see. Marcella feels like a deer in the headlights. Then take a break, Marcella. Don't do that to yourself. That's totally stressful. Do you prefer trading equities or options on these gaps? If they're very, very expensive, it's better to do options. It just makes sense. Something like CMG, I mean, that's just a better option trade. Amazon, same thing. I mean, you know, a day trade Amazon if you want to, but at $1,600 a share, I think that's like a little bit crazy town, even if you could afford it. Do you prefer trading equities or, I answered that. I've seen a lot of companies this earnings season gap up huge and sell off. Okay. Do you trade earnings gaps? Yes, I trade whatever is gapping. I trade whatever is gapping. You're right that there has been a lot of that. There has been a lot of that. In fact, I talked about that several times on TV. It's been a problem for stocks, but I haven't gone long those gaps. If we have time, we'll look at some of them. CAT was one. BA was one. I mean, my God, there's a lot of them. Amazon was one. There was a lot of them, but we didn't go long them. When your direction is wrong, how do you change your bias? When the direction is wrong, you mean, I'm not sure what you mean, but if, for example, if I take a trade, like today Walmart was a short. What if Walmart had stopped out today and rallied all the way up to 95 or something crazy? Then I would have stopped. I used a stop. So I put in a stop. So you have to have a stop so you don't lose your whole account. You have to have a cutoff point where it stops you out and you say, wait a minute, it stopped. Therefore, it's not going to work today. But I don't change my bias and go long it. if the gap rated well, which is the only reason I do it anyways. For example, Walmart today, per my system, rated 23 points. It was a really good gap. There was nothing today that was going to change my mind that we weren't going to do that unless it had failed, but it didn't. Anyways, because it rated 23 points, we did the setup, it worked. But what if it had stopped out and rallied up to some crazy number? What if it had failed? I wouldn't have gone long it. So I don't change my bias then. The setup either works and we get stopped and we lose and we go to a different pick, or we just stop for the day with the one loss, or that's it. I'm not flip and go long and short. And this is a very important point I want to make here. I don't want to get too off track here, the webinar, but I want to make a very important point. You can't have two biases in a stock in one day. That's impossible. Because if you do, then guess what? You don't have any conviction at all. And you really don't know what you're doing probably. And that is what a lot of people do. They say, wow, this didn't work. Quick, let's flip it and go long or go in the opposite direction. Where's your conviction? It's like saying, I want to marry this person. Nope, I want to break up with them. I never want to see them again. I hate that person. I love you. I hate you. I love you. I hate you. That's crazy town. That's absolute insanity. That's the kind of stuff that makes people go insane and makes people not want to trade and makes trading seem very stressful. Hey, listen, I don't like losing. Nobody likes losing, but sometimes it happens. My system is about an 80% win ratio. You got to figure out if every 10 trades, 2 we're going to lose. I don't flip the trades and go long, because then you know what? Every time I see something like Walmart, or I'm just saying that because that was today's, there could have been another one, I don't stick on top of it and hold the conviction if I would flip-flop back and forth around again. And that means, what if you take a trade and it doesn't go right away? If you're in it, the stop's holding, everything's fine, it's not doing anything wrong, but you're not up money. It pushes against you a little bit. You're down. What if you're almost totally down? What if you're almost stopped? You know what? In fact, I do have this one in here. We'll talk about it. It was yesterday's Hertz. Hertz, we almost got stopped out in yesterday. There was another great call. It was a short. It almost stopped out. I think it was 4 pennies from stopping out. The trade held. I didn't flip it. I didn't kill it. I didn't go long. Did stop out. It worked. In fact, it fell all day. I'm missing some questions here, and I'm really getting off track. It's nothing about percentage of move, Peter. Nothing about percentage of move. Bob says I'm the best, thank you. Give an example of what, Bob? Give an example of what? Shrip. Okay, we'll look at Shrip. Let's remind me at the end. Let me get through some of this here because I do want to show you yesterday's trade in Walmart. We didn't even get to the charts. I don't even know where I was here. Ask me about Shrip at the end. Anyways, we're talking about a big flow of money. That's what you want to trade with. Okay, HTZ. Let's talk about this one. So this was yesterday's. This gapped, okay, and I really, really liked it. But there was other stuff to look at yesterday, but this was the best one. I stayed on top of it. We almost got stopped. So here was the close the night before. Boom, gap down in the morning. Now this happened to be an earnings gap. Walmart was not. This tail thing here was a rally. So this rallied. This came in actually to the prior support. Some people bought it. So we were in this short and we were down until it broke. But this got rated good. Rated good per my system to short, and look where it went. In fact, this followed through today. It broke 18. You've got to know what conviction is. You got to see what's happening. You have to see, it's a skill. It's a skill. It's a skill. If you came and did my class, you do the class, you pay me for the information in the class, but it's a skill. You're not going to learn the skill in a weekend. You'll learn the skill trading with me in the room every day, and you have to do the class to sign up for the room. But you will learn in the class how to find the stocks, and then how to trade them is a skill that you will acquire. And that's why when people decide to do this, they just, people just think, well, instantly, poof, whatever. But if you want to get good at something, it takes time. It doesn't mean you're not making money over in the meantime. So say you start trading, you do the class, you do my class, you start trading on Monday. By Friday, you could be at money, but it doesn't mean you're perfect. You know everything in the world. But every week that goes by, you get better and better and better and better. See, it's like if I would draw an equity curve, boom, it was going up. The more you trade, the better you're supposed to get, the more money you're supposed to make. That's life. The more successful you are, the more opportunity you have, the better you get. If you never get on and start climbing up the mountain, then you're just down here at the bottom of the mountain waiting for success to just what? Knock on your door? Like, you think success is just going to knock on my door? Like, if I wouldn't have gone out and put myself out there to get on TV, do I think that Fox was just going to knock on my door and say, Melissa, hi, Melissa, how are you? Do you want to get hired? No. It was 3 years. It took me 3 years to get on Fox. 3 years. 3 years of my life. It took me 3 years to figure out my gap system, too. No one is knocking at your door. Come on, here's $1 million. This isn't the Publishers Clearinghouse. You have to do it yourself. You have to take it upon yourself that you want to be successful. You want to go out there. You want to make it happen. If you're not going to make it happen, if you can't even take a weekend out of your life to take a class, if you can't even spend the money for my class, which, by the way, isn't cheap, but it's definitely worth it. It's $5,500. What do you think? The market's just going to throw money into your lap? Going from trading room to free trial to free trial? Never going to happen, okay? You have to take it upon yourself to become an expert and learn how to do this. Decide that you want to be successful and do it. And it's really about the institutional money for me. It's about gaps and it's about the focus. You focus on one thing. And I don't switch biases on any stock on any given day, okay? You can't have 100% conviction somebody's a long, 100% conviction and somebody's a short. And my relationship example was a good example because you can't be in love with someone and want to marry them and hate them and never want to see them again in the same day. It's impossible. It's the same idea, okay? So I'm focusing on gaps. They have huge money. How do you find them? I talked about this a little bit earlier. I have a checklist. This is what you'd learn in my class. You go through the checklist, boom, boom, boom. I told you Walmart today rated good. It's looking for power money in something. That's what moves stocks. That's what moves the overall market. Now, I did cover this already. Not every gap is good. Not every gap up is a long. Not every gap down is a short. We talked about institutional money too. Gaps happen every day. Earnings season is a good time. Now, there's tons and tons of gaps during earnings season. It's a good time to trade. Now, let's look at Walmart. Okay, so I took this morning. See the time here? So I clipped this morning was 9 a.m. So at 9 a.m., Walmart was around 81.77-ish, okay? And I rated it. Now, this was happening live, okay? This was before the open. So the beauty is that you would rate it in the morning, anytime before 9:30, and you say, wait a minute, do I want to do anything with this at all today? Is this a short, is it a long? Now, Walmart had earnings here, way back the last one. I guess the next week is earnings for this quarter on Walmart. I have no idea what it does, okay? But anyways, this was the last earnings here. This was the middle of February. So this had a gap down here. This stock has never recovered. This stock has never recovered since the earnings that happened in February. It's been basing out for a while here, broke today. It has never recovered since. In fact, today was a news gap. It was not an earnings gap. I don't remember the exact reason, but this has really never gotten going anywhere. Even last week, when the market rallied, this barely could save its life here. You see this? This was a rally in Friday when the market had that massive green day, which I would not have suggested to buy. But if you did go on the market on Friday, you could have made money, but I wouldn't have bought it. Why? Why? Because the market gapped down. Market actually gapped down. The SPY and the QQQs gapped down on Friday. I know we rallied, and we rallied on support, but that's not what I do. But anyways, look at this. This was like dead in arrival. Even on Friday when everything lifted with Apple. Okay. Now here is the gap happening live. So this was really early in the morning. So this is a 15-minute chart. So this is all the pre-market. And this could be at night too. Like I said, Fox is out tonight. So this is all, look at this. So this is a lot of volume. Someone's talking about volume. Look at this. These are monster bars. Now this is all in the pre-market, but you still got to rate it. You still have to rate the gap. You still don't know. This still could have not rated well, and therefore we wouldn't have shorted it, okay, because I wouldn't have gone long this, but you got to rate it. So that's what you learn in the class. Now here was the open. You see, this had a big move up. This actually had a big move up in the open. This was, I don't know where this is at right now. Somebody can tell me where Walmart's at right now. This was at one point, 10:21. I just clipped this and plopped this in here. Oh, here's the 1 minute. So here's what it did. So some people went long Walmart in here, thinking it was going to fill the gap. It was down into support on the daily chart, but it was a short. This is the move you want to get. This is the move you want to be. This is the move you want. This is how you're making money. You're shorting Walmart here. All of this beautiful thing here. That's what you want. Okay? It's at 82.58. All right, well, it's just hovering around this area. What was the low so far today? What was the low so far today in Walmart? There was news out about Walmart. It's going to buy Flipmart or something in India. That was the news. But again, I don't focus on any of that, but I'm just telling you it was a news-related gap. Anyways, the 26-point checklist is what you learned in the class with me, which told me that Walmart was a short, said that Apple was a long, all of those things. You can do longs or shorts. I do prefer shorts because they usually move very fast, but you can go long gaps too. But it's all about finding the power of money, whatever you're looking. If you think about it and just think about it intellectually, you're like, okay, this makes sense. It does make sense. If you're going with the crowded traders, it's going to be hard for you to make money. And traders typically just buy support and short resistance and look at different indicators. It doesn't work. If any indicator out there was the be-all, end-all, we all have it and nobody would make any money. Okay? That's just not rational. Think about it intelligently and you say, well, wait a minute. Okay. It makes sense that it would be easy to make money in the market if we go with the big money. That makes sense. Now they got to figure out how to find it before those big bars happen. And that's the key. And that's what I do in the pre-market, which is when you're going to see the gap. Or you could see it in the post-market. You could see it in the post-market. Apple gapped at night. I told you Fox is out tonight. Walmart, I didn't look at the time that reports of the day next week. That could be in the morning or that could be at night, but that's one to watch too. So my system, the rating system, that's what you come and learn from me. And then you gain the skill by being with me in the room. And then I make the calls. Like today, yesterday, HTZ, I say this is the entry, this is a stop, this is the target, okay? And you trade with the power of money. Now, this was yesterday, again, HTZ, fell. This is buying, Apple, again, rallied. When you become good at how to spot weakness, though, again, I like to focus on shorts preferably for the quick moves, but then you're going to really know how to focus on reading strength better, too. It's really about having the conviction, which you can't flip-flop back and forth, and you've got to have conviction to make money. Let me just see if I'm missing any other questions here. What was the low Walmart? What was the low on Walmart? If I have time, I'm going to bring Walmart up. 82. All right, let me just finish this here, and then I will bring up my charts really quickly. Anyways, you can't go with the crowd. I think I said that earlier. You've got to have an edge to trade. Opportunity sets up in gaps pretty much daily. This was the trade from yesterday. Let's go over this quick before I bring up the Walmart. So remember we were talking about bias and things like that. Here was a setup yesterday in HTZ. Closed here, gap down. This was the open, dropped. So the stop was over here. The trade then, entry was here. The trade was down. So the trade was down before it broke, almost retested the high. So here's people trying to buy it into the support on the daily chart, and we were short it. So we were down here until it broke and went, but it was a huge trade. So this was a short. So see, the bias on this was correct. And that's why I have a daily bar that looks like this. But people were trying to buy this here into the open here. That's what this was, and we were in the trade, the correct direction. Institutions were selling HTZ, not buying it. And how do I know? Because the short play worked. And at the end of the day, the stock closed near the low, and it looked like this. You don't have a bar that looks like this. It's getting bought. And so do you see how easy it was to make money shorting HTZ yesterday? But initially, it had to push back, okay, before it broke. Now, it might have gone immediately here. It did drop a little bit, but then it pushed back, but the stop held. Okay. Anyways, entry for yesterday's HTZ was 1989. Share quantity 3,000. I got out of this very early, and I got out of the Walmart early today too. But exit on this was 1954. Profit $1,000. Time and trade 20 minutes. This ended up going to 18. You could have held it to that number. You could have played it a couple times yesterday. But I like to focus on the morning. You will have days though like this. And Walmart, who knows, could be one of those days again today too, where the stock just rolls over all day. You don't know. But you'd have to sit and watch and wait with it. But I prefer to make money in the morning. All right? So that was a great example of one here where you have to stay with it and you have to hold the conviction because it pushed back. Now, how much money do you need to day trade? If you open up a retail account, you will need $25,000 to actively day trade. If you open up a proprietary day trading account, you can do so with $2,500. Your leverage is different. I'm not a broker. You have to check with brokers to find out, but there's two different types of trading accounts to be active, prop and retail. Check into both, okay? Now, as far as doing options, your risk in the option is wherever you can open up an active option account. So you can check with any broker for that. Your risk is not to do with your buying power margin for options. It has to do with the cost of the trade. If the trade costs $1, that's all that you're paying. You'll only ever lose what the cost of the option is, even if the whole thing goes bust. With day trades, you have something called BPR margin, where you need the equity to take the position. But that's why everybody trades on margin. A retail account is 4-to-1. A prop account can be 10-to-1, okay? You can day trade, though, with a small account. And you can do options with a small account too, but you have to watch how much you're risking. I said this earlier, the Golden Gap win ratio is about 80%, so figure of every 10 trades, 2 will lose, and 8 should work. Typical risk to reward, something like yesterday, I'm usually looking for one-to-one flip around, but actually that would have been a huge trade if you would have held it all the way down to 18. So it's really up to you if you want to hold stuff a little bit longer, piecemeal out, or take more than one trade in it. But the goal each day, if you're risking 500, you're looking to make 500. If you're risking 1,000, you're looking to make 1,000. But some trades, you'll risk 1,000, you can make 4,000. Okay? So your goal, though, should be a one around, flip around. And that's even for the options, too. Anyways, it's really about having the right information, because with the right information, you can make money. So even if you have a small account, if you know what to do, you can build a small account up, because you'll learn what to do by doing the same actions and duplicating it over and over and over again. Here was the option call that I made in Apple, and it was late, 3:30 in the afternoon, basically, on the day of the earnings. I really wanted Apple to get over 180 in the earnings. I said that on TV the night before. It didn't do it. But I called it around 177. I saw it was going to get over 180. This was the day of the earnings on the 2nd. And then it took till Friday. It took till Friday to do it, and that's when it blew up, and it just blew up and exploded on Friday, and even moved higher on Monday too, if you held it. So here's just an example of, this is not an equity trade, this is an option trade. Price of the Apple one, okay, was around 160. If you had 10 contracts, it would have cost you $1,600. Your profit would have been what? $2,900. You don't have to risk this. You could have taken one contract and risked $160. How much would you have made? $290. Here, if you would have risked $3,200, profit would have been $5,800 for 20 contracts, which is essentially 2,000 shares. So you can see here with Apple, because of the price of the stock, this makes sense where you could take more size, doing it as an option for that move. Okay? Any questions so far? I know somebody wanted me to look at trips. Somebody wanted me to look at Walmart. Just want to finish this up here. Anyways, trading is about chunking it out. It's income generation. Looking for the institutional moves to be consistent. If you want to learn my method, you would learn in the class what? The 26 points, how to enter negative stock on the day, and you would learn really how to reprice correctly on an advanced level using technical analysis, which is on the daily chart. So in my class, you would learn one solid strategy to trade gaps effectively by reading the side of power and charts, how to read support and resistance correctly to take positions in the right direction, because that's how you're going to make money. You got to go long stuff that's rallying and short stuff that's falling. You will learn a more proficient and advanced way to read charts, focusing on technical analysis and gaps, and you will learn how to get conviction in your trading, which is something that's very important. And once you do that, you will make money and you'll become more confident. People that make millions of dollars in the market or hundreds of thousands of dollars in the market are confident people. They know what they're doing. They're confident. If you trade and you're not confident, you're questioning, second-guessing yourself, or changing your bias all the time, you're going to lose. You're just setting yourself up to lose. Couple questions here. Do you screen the whole market to find these gaps? Usually I can make a small watch list with just going through the top 20 list of ups and downs in the morning on the platform, but you can go through as many as you want. You can find gaps anywhere. It's not hard to find them. It's hard to find the good ones, and you got to rank them to know the good ones. You can find gaps anywhere at all. You can print out all the earnings reports for every day between now and the end of the year, at night, in the morning. You can look in your top 20 list. You can pay for a scanner. It's not hard to find them, okay? That's easy. And I mean, you don't have to pay for a scanner. It's on your top 20 list. You can get 40 picks off of that, or just print out, the earnings. Because most things that gap are earnings, not all, but a lot. You can even watch TV and get stocks that are gapping. They're everywhere. So that's easy. It's finding the good ones, though, and then determining the direction. So anyways, I want to close in here and talk about something really quickly. What if you could be successful as a trader, but you don't do everything you possibly could to make it happen? What if you could, but you'll never know and you never try? What if years go by and you never know and you keep thinking about it but don't do anything? What sacrifices are you willing to make to have a career where you can work daily from home and make a few $100,000 a year? Are you willing to make some sacrifices? Are you willing to make no sacrifices? Are you willing to make every sacrifice necessary? I guess this is something that you have to think about. And when I was going through my own process back, 2008, the beginning of 2009, when I first started out, when things were hard for me and I didn't know what I was doing either, and I created this system and I taught myself with my own money, winning, losing, and figuring it out. You just have to know. If you're willing to make every sacrifice necessary, guess what? You have the highest chance of success. I find that most people are not. So that's part of the reason why most people aren't successful. When you are willing to make every sacrifice necessary, whatever that happens to be, anytime it comes along, guess what? You're probably going to make it. If you are not, you don't have as high of odds of success, and you're probably not going to make it. Because that's what makes it so special for the people that are wealthy, that do this and see success, and that can pull thousands of dollars out of the market consistently. And I say chunking it out because some days there may not be any good trades. You don't know, okay? Some days you just know. You know when the good ones are there and you go for it. So it's, like I said, time is ticking. It's halfway through the year. Summer's a great time to trade. You can trade from home. You got to have conviction. You'll learn more about that in the class with me. Empower yourself to trade the market. My class is called the Golden Gap Course. It's a full 2-day course on how to strategically find, pick, and place stocks that are professional bearish gaps. The class is online. You could be anywhere in the world and take it, okay? Next class is May 19th and 20th from 9 to 5. Cost of the class is $54.99. Earnings season is here. It's a great time for opportunity. Let's just pull up some charts really quickly here. And there is Walmart. Can everybody see that? What's going on here with this trip? I don't know how much longer I have to talk here, but let's see. Trip. Oh, I know why I didn't see this. Obviously, this gapped up. See, I always focus on the shorts first. That's just me. I just prefer to short. So I didn't even see this morning because I liked a lot of shorts. There was a bunch of shorts, not just Walmart, even though that's one we did. M&ST, Monster Beverage, was another short. But anyways, this worked as a bullish gap. This was a long. I gotta be honest with you though, I don't think I would have done anything with this. It did work. I wouldn't have done it. So it did work. I would not have gone long it, but I wouldn't have shorted it. I wouldn't have done anything probably with it. Let's look here. And in fact, I would not be in this overnight. Let's just see what this was here. What was the move? This really didn't have an insane move either. I mean, it did push up here really, really quickly. Boom, boom. It did move more than $1, but this was not a small stop either. So this wasn't easy. This wasn't smooth. This doesn't look anything like Apple. I would not be in this overnight. It did work as a long. It did gap up. I'm not going to take the time here to rate it, but I didn't see this because it was a bullish gap, and I don't think I would have done it. If you went long it, you made money. It's not as short, but I wouldn't go long here overnight in this. I would just leave this be. If you went long today, you could have played it as a day trade, quick in and out. Could have been in and out. If we had done it, which I didn't, and I don't think I would have, I would have been in and out of it and like lickety split. Just not crazy about that, but it did work. Let's quickly look at the market here. Market's trying to hold. Dow is down. Let's look at Walmart. Okay, so Walmart low was 82. It did get to 82. So you could have held it down to 82, or you could still be in it. I mean, Walmart is lower, but again, the morning play was here. Here, let's make it all fat. So if you did the morning play, you're in this, and you're actually still up in it. You could be in it, but again, I like to be in and out, in and out, in and out. So here is the play. Boom, boom. Now, if you held it, you could have done this up in here. You could have held it down to 82. 82 was the target. I did say that in the room. It has other targets, bigger targets. Actually, I call the put in this. I could have put in this too, so people could be in the put. This could be lower today. It's 11:38. I don't know why you want to be in a trade around lunch, but if anybody's still in this trade from the room from the morning, you're up from where we called it. So you're still up in the trade. But again, to day trade, you want to be in, out, in, out, in, out. Now, this was one of the ones today that just immediately dropped and broke. But it was a great call. Why? This pushed back. This had a big rally. But do you see here, Walmart is not getting bought by institutions. What? Why? How do I know? How do I know? Because the stock would be trading at 82.58. The stock would not be trading at 82.58, 82.59. It would, when something's getting bought, and that's why I'm not crazy about this thing here. I mean, this is not crazy about this thing here. But when something is getting bought, it looks like, see if I can find something. I can't really think of anything else other than Apple right now that was recent, because there wasn't any good long second. Oh, NVIDIA on Monday. NVIDIA Monday. We didn't do this, but I saw it. Was this Monday or Tuesday? Hold on. Any other quick questions here before I got to go? Watch me tonight at 6 if you're around on Fox Business, Charles' show. NVIDIA, this on Monday. This is a good example. This is falling through. Actually, this just made a new high today. Here, this was a nice one. We didn't do it, but I saw it late. But anyways, this is institutional buying. So Walmart does not look like this today. Why? It's selling off. It's not getting bought. This is getting bought. This chart looks good. It's late. It's late here, I wouldn't do anything in this now, but this had a really good move here on Monday. By the time I saw it, it was too late to call any trade in it though. But look at it, made a new high today. You know, this is very strong. You have a great mental attitude. You're going places. Thank you. Thank you, Alex. Listen, have a great day, everyone. Enjoy the rest of the people. Enjoy the rest of the speakers. And hopefully you learned something here today. Hopefully you learned something with the next one, too. And thanks for having me.